In today's video, I'm going to teach you how to put Stop Loss Thinkorswim. A stop loss is a safety net for your trade. It's an order that activates only if price reaches a level you choose, helping you limit losses or protect gains without staring at the screen all day. Let's walk through it clearly and simply. First, open the Trade tab and pull up the symbol you want to trade. Type the ticker in the symbol box and make sure you're looking at the correct product, such as stock or option, before you proceed. Verifying the symbol and instrument now helps prevent accidental orders later. Next, click either Buy or Sell to open the order entry ticket. Which button you choose depends on the direction of the stop you need. If you're long a position and want protection below the market, you'll place a sell stop. If you're short and want protection above the market, you'll place a buy stop. Clicking the button simply brings up the ticket, so you can structure the stop order correctly. In the order type dropdown, choose the stop type that fits your plan. Select Stop if you want a stop market order. That means once your stop price is touched, your order becomes a market order and should fill quickly, but the exact fill price can vary, especially in fast markets. Or select Stop Limit if you want more price control. With a stop limit, you set a stop price to trigger the order and a limit price that defines the worst price you're willing to accept. This can reduce slippage, but the trade-off is that it might not fill if the market moves past your limit. Enter your stop price, which is the trigger level. Think of this as the line in the sand that tells the system when to send your order. Many traders place stops slightly beyond a recent swing high or low to avoid getting triggered by normal noise, but always choose a level that matches your risk tolerance and strategy. Adjust the other details to match your intent. Set the quantity so it aligns with the size of the position you're protecting. Choose the session and duration. Day means it's active for the regular trading day, while GTC keeps the order working until it's canceled, often across multiple sessions. Be aware that stop behavior can differ outside regular hours, so read your broker's session rules if you plan to use extended trading. Finally, review everything in the confirmation window, making sure the side, symbol, order type, stop price, quantity, and duration are correct. When it all looks right, click Confirm and Send. Your stop is now in place, ready to help manage your risk automatically.